What's up, guys? Dakota back with another video. Today doing another weekly trading review, WTR on 2022 June 12th to the 17th. Again, this is another run through this to make sure like the audio quality is good and make sure I'm reviewing it properly or at a higher standard. But if this is your first time hopping on one of these videos, what I do is just review my trades for a specific week so that I'm able to personally go back and review that week and see what I was progressing on at the time and see if I'm making improvements. If not, adjust my plan or adjust my implementation of those things and get better. And also to show some of the behind the scenes work with trading, because it's something that I wish I saw someone else do when I first got into trading, because I felt like I was wasting so much time doing certain things. And I just hope that this gives other people the confidence to continue doing the work that they're doing and just not give up too soon before you give yourself a chance to succeed. So let's go ahead and get into this weekly trading review. Let's go to this. This is a quick overview of the week, what it looks like. I took about 4 trades, right? And every single trade I won. And something interesting about this week, I actually ended up passing the 200K challenge with this week, the challenge and evaluation. Basically just getting funded 200K, right? And let's see, make legitimate. And one thing I want to do before I fully dive into this, something that really stood out to me is I would make a grading scale. And just so we don't have to go over this later, I use the grading scale from Jared Tendler's mental game of poker, mental game of trading books. And this is basically the template. You can just make an Excel sheet, set this up yourself, or Word doc, whatever you want to do. It's a really simple method. Here's a sample of it. The last time I actually updated mine was in February of this year. So I have to go through and revamp this because some of the problems that I previously had, I don't really deal with anymore because I found solutions to them. So that's a to-do that's checked off the list. Boom. All right, and now let's get into the review. All right, for June 2022, 12th to the 17th, week close plus 10.49 R, double-digit percentage return. I did really well on paper with 4 wins and 0 losses. I ended trading early this week because I noticed I was getting overconfident. I decided to trade a different account for the other setups I was watching, and we'll do another report on that. Okay, so I'm sure that a lot of people, a lot of traders have experienced like just winning, and you feel like everything you do is just right, and you're kind of in this flow state where every idea you're just taking the trade. And generally each week I have about 3 to 4 trades, 3 to 4 trades that I take, right? So when I see all 4 being winners within that same week and not having to carry any trades over the weekend, to really spurt, it's a really big spurt of confidence for myself, noticing, hey, what I'm doing right now, at least right now, is working. And I quickly noticed and it started to wrap up the week. I think it was around Wednesday or Thursday. Yeah, maybe I think it was Wednesday. Whatever the last trade on this week was. Yeah, Wednesday. I started to notice, hey man, there's an opportunity here, an opportunity here. Oh, I could take this opportunity, and those weren't necessarily pairs that I was, like the ideas for the pairs that I had laid out for this week. I took advantage of them, and they closed out. All right, and I was about to start adding other pairs that didn't make a full-fledged plan to trade for that week, even though they were like perfect opportunities. At this moment, I just felt that I felt like I was going to make a mistake because I felt like everything I was doing, I couldn't do any wrong. So after noticing that, I was like, let me stop trading here. This is a really good week. And let me go trade my other personal account. All right, which I was trading 2 accounts at the time, and I just ended up focusing on one. I actually made 2 mistakes this week on trade 1 AUD/JPY, trade 4 Euro AUD, 1 management mistake and 1 entry mistake. So the management mistake and the entry mistake both ended up in profit, but I could have made more profit on the other one. I should not have taken the trade. I believe the trade I shouldn't have taken was Euro AUD. It was a very weak level that I was entering off of. I made that grading scale, so let's go ahead here. Actually, yeah, no, we're good. We're gonna stick here. So starting on Monday, AUD/JPY, the first trade that I made a mistake on. If this is acting respectively, should be the management mistake, but we'll find out in a second. So the idea was a 3-legged JCP pattern. I set an alert at 94.98. What sell was enforced by shooting star daily bias, so that's really good. This was activated overnight. I woke up around 3 a.m. and turned on computer to hear alert going off. I placed entry based on break of pattern, stop based on 15-minute thrust candle being above R level, resistance level, and trend line gave me confidence in knowing if price came here, the idea would be wrong. Target was set 1 pip beyond the daily level 9402. Since shooting star daily bias was coming off a weekly level, I was originally confident in this target over the usual low of the traded pattern. The management mistake, I just remembered I just remembered everything about this trade after reading that. So let's continue down. All right, so those are just words. Let's go ahead and actually look at the trade. Let's look at this one first. So this was the trade. We had a shooting star here on the daily time frame. Let's actually go to the daily. It was a weekly. Oh man, what a shame. That should have never been closed. What a shame. This one, this weekly, like exhausting right below this weekly level 97.3. And getting the opportunity to sell just underneath this signal that sellers are really strong in this area, and got failure of this previous level when price tried to break up to that weekly level. That's strong signal for me to, hey, look for a runner here, right? Especially that being a weekly shooting star. That needs to be changed. I have that as a daily, it says daily bias, I should say weekly bias. Let me make that change right now. Because that's really strong, and that's something that I'll bring that over here so I don't have to bring that up again if I have to make any more changes. It's really strong, telling me, hey, look for a potential running here. The daily bias is more of something to say, hey, look for short positions today, or this week, something like that. But that weekly could have turned into a runner over the course of a week, maybe 2 weeks, that I'm willing to hold. But yeah, so I was looking for a sell just under this, especially after that failure. And then daily, we've got 2 bear days, and just looking for price to come down to about this daily level, if not beyond it. So I woke up at 3 a.m. because I think I went to bed that night around 9, maybe 9:30, and I usually go to bed around 10:30 when I'm sticking straight to my routine. And like my body just woke me up. Whatever. Yeah, but my body just woke me up. Now, my prime entry for this opportunity was actually right here at this level. This is something that I didn't draw out and wasn't really stressing. I think there was a lack of focus. That's what I would dictate it as right now. There was a lack of focus here, and I wasn't really identifying my entry level for this potential entry, right? So you can see that I have this line here, and for that, this is more of a, I was like, oh, here's a potential correction here, and I wasn't really paying attention to my 3 legs. So this could have easily turned into an entry taken too early for me, but I decided to wait because I didn't get my actual entry confirmation here and waited for more structure. Now, as price came back up to this trend line, didn't have an alert up here. Ideally, I would have an alert right at this level, looking for exhaustion with the JCP setup, and my stop would be right above there, and my entry would be on the close or open of this candle, right? Now, luckily, this is very lucky. Luckily, I woke up at 3 a.m. The alert on my phone went off, so I went ahead and checked my laptop. Yeah, so opened up the program, heard my alert going off on TradingView. I was like, where's the opportunity at? We haven't broken this low yet, so there's an opportunity for me to get in. Wasn't the best of opportunities. In order to place my stop, I had to go down to the 15-minute off of lower time frame structure break to place my stop off of. And the original target was this daily level. Now, as we end up, like, wrap up the description of this trade, I moved to a sell and profit after that's the management. I knew I would be okay. Yeah, let's read this. I considered adjusting my target to the last major swing low, 93.76, but decided to keep the profit short because I knew I would be leaving for the gym soon and rather get in and out quickly if I'm not monitoring the position as it is approaching a significant daily level. I ended up closing the position early. I was heading to the gym and hadn't done my prep work yet, so it wasn't in the ideal state of mind. I don't want to be dependent on this. I falsely identified a rejection off of a minor high, 94.20. As a reason to exit and the reason that price could bounce here, and I want to secure the profit before leaving instead of possibly giving up the profit. Really focus on P&L. Really focus on P&L in that situation. That's bad. This is very poor management on the trade. It shows a lack of confidence in the trade I planned, and an exit based on nothing that would drive a decision in my trading plan. There is no point in moving my stop if I'm going to exit the trade when I have my tail between my legs. I have to see my trades through, otherwise I will have a ton of trades based on arbitrary occurrences when I come to review my trades collectively. My trades collectively could end up as a waste of time, as it is difficult to improve a strategy that is inconsistently applied. I move my stop for a reason, to lower risk. Play the trade out for the idea and not for the profit. I will review and playbook this trade to keep this in mind. Okay, so I need to add that to do back because I have not playbooked this trade. Oh, that was the to do in the summary. Oh, cool, awesome. That to do is already there, so I'll follow through that. That's kind of late. I need to be better at scheduling, like when I'm gonna go back and do these to-dos within these weekly reviews. It could just be Sunday, honestly, because yeah, I could just do that on Sundays because I review on Saturday and then do the actual work that's required from the review on Sunday. Cool. All right, so something that really irritates me is when I make trading decisions that aren't based on my plan, right? Aren't based on my strategy. That's something that really irritates me. And it irritates me because when I go to review my trading journal, when I go to review a specific trade, and that trade, whether it's a really big winner or it's a short loser or whatever it is, right? And it has nothing to do with my plan, that means my stats aren't reliable, right? The stats my journal is showing me aren't reliable for when it comes to comparing it to my strategy, right? The intention of the journal is to show the results of implementing this specific strategy. And if I'm not implementing this specific strategy, I'm making a arbitrary change, cutting the winner early, it skews the results of that strategy, right? So I could go in expecting, oh, I have a 60% win rate of this trade, but I closed every single winner that I had early. Or this is my R for this trade, and that same example, I closed every single winner that I had early, and this isn't the actual potential of this, right? So that may mean the prime opportunities that I have in my system, I'm not able to take full advantage of, or I wouldn't be willing to take full advantage of because they have a lower R than another strategy that may have a lower win rate or not as high as a win probability of that. Also noticing when should I cut losers early. If I cut my losers when I shouldn't have, like not labeled in the plan, I make a cut in the trade that's not really reasonable, and then in my stats it just shows, oh, this is your percentage, but it's actually not. That's something that really irritates me, because it feels like just a waste of review, a waste of tracking. because I don't necessarily know, hey, because I did this over these 3 sample sizes, these are the results that you get from executing on that. And I kind of have to weed through the reviews and eliminate some of those mistakes out of the stats. But ended up with 1.22R. This actually should have been a bigger winner if holding, right? You can see that just clearly came out as a runner. I was really just scared, right? Because my target was beyond the daily level, which is completely reasonable to set my target right there at the daily level. But like I said, I didn't do my daily plan because I woke up at 3, and right around the time I was about to head out to the gym because I woke up early. I was like, let me just go to the gym and get my running routine out the way quicker. And this is just, so I just closed at the open of this candle, like with no signal, no real reason to exit that trade at all. I went to the left, and I went like on the 1 hour. I saw a minor support level. I was like, oh, price just closed right above that minor support level. Let me close so I can go to the gym and have peace of mind. Yeah, just not doing my pre-work for trading. Just didn't have me in the right mindset, let's say. Okay, and something to note, because I want to make, if you are going to start using like this program Obsidian, I commented out these notes, but I'm going to re-download that and put it in quotes. Right, so this little thing puts everything in quotes, so it just blocks off the text that, which are just notes that I made in the screenshot, the review screenshot that I have. And this is how you do it. Maybe I should do like a video like just specifically on Obsidian, because it is very useful in finding the relation between certain trades. Like any system like this, even if it's from Research or Notion. I'm not sure about Notion. I haven't used Notion to the extent of this, or Rome. I haven't used Notion like Rome or Obsidian, let's say. So let's move on to Tuesday, trade 2, Euro AUD. High to buy off hourly level 1.49880. Originally, I was fairly confident with this trade and set a limit order at 1.4968. I did this because on the daily time frame, I saw price reach the top of a daily flag pattern, and I was looking for a breakout and continuation to the high of the flag. Also, the level I placed my limit at, 38.2 fib confluence, which is the highest probability fib level based on my stats, 90% of zero target being reached, and with 0% target. With 0% target being shy of the daily bullish flag, I decided to push my target to the next specific level outside of the channel, 1.5165. Considering the daily pattern, this decreased the chance the target being hit to 38.42. What do you mean? Why? So how I just understood that is that I have 0% target, right? Oh, okay, I understand. The 0% target fell short of the daily level, right? It was slightly short of the daily level, which we'll look at. What daily level? There is no daily level here. Oh, okay. Talking about this daily level then. Why isn't it on my daily time frame? So the level's about here in this area. Let's get the exact price. 51.85. Yep, that's actually dope. So 51 is about this level. I believe I targeted the high of this daily candle here, and like 1 pip above it. And I was looking at this trend line, and I was seeing a daily flag pattern here, a typical three-legged pattern. Missed the original entry down here, and I saw an opportunity to enter here off the 1 hour time frame and look for that break outside of this this flag pattern that I had, right? So I targeted this level instead of just targeting the high of that, because if this idea is going to play out and get to that weekly level, we're probably going to have a breakout of this trend line that I've drawn here. If we're going to have a breakout, what's the first area that we're going to have resistance at, or price is going to combat at? It's going to be around this area, right? So that's the reason why I pushed that. Okay, so price stopped short of my limit the day I set it and hit the top of the bullish. Stop short. Whoa, what? Oh, okay, I remember. Price stopped short of my limit the day I set it and hit the top of the day bullish pattern. During my nightly review, I saw this and my confidence in the setup diminished. I removed the order overnight and set an alert to wait for PA at the level. My opportunity came in the morning. I took a position and went to the gym after 1 hour of watching it. Before I left, I misstopped beneath thrust candle. Before level, I moved, whoa. Before level, I moved stop beneath thrust candle of 1.5055, which is also the thrust candle of the trend line of the flag. TP hit while I was away from charts. Let's go ahead and look at this. I should specify what level I was talking about. Okay, so the actual trade idea here, right? Got an impulse to this hourly level, breaking this high here, or this hourly level that I saw as significant. And for entry, I was targeting this last high pre-break. So level broke here. Last high that was untested below that level is here, and my limit was set here on, what was it, Monday, right? I believe this was actually a trade that I planned on Sunday or Saturday night, and I put a limit in here, right? Limit in here on Monday, but I canceled that limit because price stopped short right here, and that's why. And when price hit that zero target, I was like, okay, so now I got to cancel the trade because my target's already been hit, so it's unlikely to succeed, or it may be unlikely to succeed. In the following day, I kept this same markup up to track it to see if it would hit it. Eventually, it did hit it, and got price action and price rejecting that hourly level. So that was a clear sign of me. Hey, people, buyers are protecting this level. So let me go ahead and enter this trade. Place my stop below the stars candle here of the last high pre-break, and set my target at that high that we talked about in the daily time frame. Here's the details of that. Short of daily level, short of daily level, short of daily. Yeah, target was short of daily level. So I targeted just below the daily level, just in case that daily level didn't get taken out. Because that was a good area where sellers came in. And I was like, okay, we could see some type of rejection here, so let me go ahead and take targets there instead of pushing it a little bit higher. And of course, this is like outside of the usual trade. It's a very specific scenario where we have a higher time frame setup, higher time frame JCP setup that converges into a lower time frame inverse setup. So those things just give me more confidence to get into the trade. And with that, Dakota Personal, look at that for potential testing of, whoa, well, okay, yeah, look for convergence of strategies for potential testing of, how can I say it, of sizing, right? Because that's something I'm working on. I've been working on it for the past year. I finally got to a stage where I'm able to size up on one of my positions, or comfortable to size up with one of my position based on the stats I've gathered off of it. But yeah, this could be a possible another reason for that. Let's go ahead and change those comments to notes, and I'll just leave this on the screen. What? No. Oh no, this is the preview. I was about to be pissed because I thought I didn't put in the I thought I didn't put in my review notes, which are the notes I make on this review screenshot. But I was in the preview section. And for the later weekly trading review videos, or yeah, just weekly reviews, I do have these quoted out, so it'll be easier to see it if you guys want to look at them. Alright, we're going to Euro Swiss trade 3. The idea is a descending channel break and retest play with target to hive pattern. I put the stop below the zone I established to give trade room to breathe. After entering on price action, I considered placing my stop above the low of price action candle, but reason that price could easily have taken out the low my stop would have been at, and it would be best to gather stats on this idea. So I gave the trade more room to breathe. Difference was 2.55R and a 7R trade. Good decision making, and get those stats quick. I really want those stats because obviously that's about a 4R difference between the two, and that's a lot to give up in that situation, right? So what I want are the stats on the probability of placing my stop below the price action candle that I'm entering off of, versus the stats of placing my stop below a Thor's candle. Right now, I've started testing on that stat. There's still a lot I need to get through. I'm currently going through testing on AU with it, so I gotta get through my other 16 pairs in order to be completed with those stats. But here's the difference on here, right? So I got a descending channel, got the breakout of the descending channel, looking for a retest of the channel right after the break. Ideally, I wanted it to be rounded, but for this is a JCP. I don't necessarily need rounded test, and this is required for a 15-minute entry because of how this is structured. Let's not get too bogged down in detail. So thrust candle here, I put it below this zone, right? So I identified this entire range as a zone. I could have actually extended a little bit lower to this point, but having just the focal point of what's the area where we're getting consolidation, rejection at for this area, I may have even made it too big. I'm gonna have to specifically go back to this and see what I was basing this off of, because it was definitely based off the 15-minute the range here. And I decided to give price just plenty of room to breathe by putting it below the candle that broke through that zone, actually got through that zone here. I was debating initially to put my stop right below this level, because for JCP setups, I place my stops below the price action candle because they're generally market execution orders. And the market execution order is based off of exhaustion. Placing my stop just below that exhaustion level is basically implying, hey, this is probably the low of that pattern that I'm trading. So that's it. Price pretty much just went straight to it. Something that I also want to know or get on this trade is the news events that were coming at this time, because something that I've definitely seen for descending channels and that I'm paying attention to within my reviews are news events. Not certain news events. Let's just say news events are scheduled when we get this type of rally, of course, right? And I know the day of, which I recently started like linking my daily trading plan, like the plan that I made for that specific day, to these reviews. But I know on that there was some news that I was really confident in this pushing up and being like a quick trade. This is the 15-minute view. This is a trade that this is just a general idea that definitely didn't comply with my rules, so I didn't take, but I tracked it anyway. And this was the price action candle that I entered off of. So let's continue down. Do I have 2 review screenshots? Oh yes, okay. I came back to this. That's awesome. Alright, so this is the original review screenshot, just detailing out some of the things here. And then this is something that I've been noted, like I went back and reviewed some of the channel plays, and just very interesting to know something, right? And why not? Everyone's not going to use this. But noticing that a level is being held within the channel, and then aggressive break of that level, right? I generally like to, for the ones that I've reviewed, I like to see at least 3 tests or 3 rejections of a certain level before an aggressive break to the downside within the channel, and then exhaustion at the low of that channel, signifying that that's the low. And that's identifying, and of course this is on a significant level. This is a significant daily level, a very significant daily level that this is happening off of. So that could be a prime signal for me to start looking for this buy and look for smaller time frame breaker structure, to look for a possible early entry to test out the waters, or just add a little bit more size before even getting into the position. And also want to pay attention to the time that this is happening around, that this type of exhaustion is happening around. Because of certain reviews or research that I've been studying, let's just say I'm happy. I'm really happy and trying to contain my excitement right now of the certain standard that these people that I'm reviewing right now are doing their own reviews, and how they study their own trades, map out their own trades, and even execute on their trades. It's just at such a high standard that I just like, when I get to that level, it would be awesome. Right? It would be absolutely awesome. I'm gonna get to that level, but that just reminded me of one of the trades that they were breaking down. That was just incredible. Wednesday, June 15th, last trade of the week. This is a 3-legged JCP limit entry. The idea was to look for a reaction off the last area that buyers clearly overtook sellers. After the breakout of a daily flag, I was looking for price to reach 1.5278 in the long term. This further incentivized the buy for me. The level was a grade 1 for me because it was, let me start using these arrows, because it was very minor in my eyes. Let me reread that sentence. The level was a grade 1 for me because it was very minor in my eyes, and I would have preferred a retest of the trend line. However, there was confluence on the level with the 38-point fib level stats. Fib level and stats prove that this is about a 90.48 chance of hitting the chosen target, so it seemed like it was worth the risk. Given that I had high probability on my side, I could have put 2% risk on position. Stats need to be factored into my risk management in the next sample size. So I'm currently going through that next sample size I'm talking about, and not making that a priority at the moment. And for anyone that doesn't understand, basically, for specific setups and specific scenarios, they have a higher probability of playing out to specific targets. Right, so after gathering those stats, I want to be able to utilize those stats and put more risk on the stats that have higher probability, ideally over 70%. Really higher than that. I need to settle on that, because like the very good ones are like 80 and 90% percentile. I just said 70% just throw out, but I don't even think I have any 70% stats. It's either like 80, 90 or 60 or below. 64 or below. But yeah, but just sizing up on those higher probability setups. But the reason I'm not making that priority, because I don't have like a year. I have a year of doing it, but not with the intention of looking to size it up, right? Because I wasn't paying attention to everything that I'm paying attention to now over the last 2 years of implementing those specific stats. And now that I'm paying attention to it and tracking it, I want to have a year of saying, okay, this is what can happen in it, or this is what has happened over the past year. Let's see if that continues, and then execute on sizing up in that situation. But my current priority in the sample size right now is just giving my trades more room to breathe, because there were a lot of trades I took since March and April. I started to notice, hey, a lot of the trades I'm taking, I'm getting stopped out early, and then price continuing that direction, because I'm just trying to get really tight on these stops because of my new stop adjustment, right? Answering off of price action and placing my stop based off of price action, at least for the JCP. And also for the limit orders, right? Which I believe I talked about in the last video, so I won't get too deep into that right now. But this is the idea. It was an overstop limit or overnight limit, right at this level. It was Uh, after the break of this trend line, this is my entry. This is the original EUR/AUD entry for the buy. Long here, got exited, or position got closed here. Overnight, the night before, I was looking for a round retest of this level. Place my entry there. Put my stop below this source candle. It's pretty much a perfect trade, but why was it something that I was not willing to take? Because the break of this level I'm basing the round of retest off of is minor. That's why. It's very minor. If anything, if I'm going off of a strong level in this situation, I'm looking for a round of retest beneath this hourly level instead of just this minor level here, right? That's literally everything that was based off of. We got to test above and we got to test below and above. And that's it. And that's on the hourly. So that's very, very minor for me. And like I said, this trade was kind of like, it's not something I typically take. And you honestly wouldn't find me taking it again, to be honest. And that's when I kind of noticed that, hey, I'm just getting a little bit too overconfident. Everything's been a winner and pretty high R week for me, right? Getting 10 R in a week is pretty high, right? Especially if you risk 2% per trade. If you risk 2% per trade, that's 20%. So yeah, the target already being hit. This, and also another reason that like this shouldn't have been taken. Target was already hit in this situation, right? So if I'm entering off of this, we got a break of this level, looking for a round retest of the last high break, and price falls short of that level at least one time, given the round retest, and hits the target. Okay, so in that situation, in my plan, I don't take positions if they've already hit the target, and I took the position even though it hit the target. So this shouldn't have been taken. Double target test. but I do want to pay attention to see like if that's something that's valid to continue doing anyway. So I was like, let's name this double target test. Let's see if that actually happens. And that's the week. I hope you guys enjoyed the video. If you guys have any questions, please go ahead, comment in the comment section. Questions, comments, or inputs, right? If you see something that I could have been doing better in this week, I'd really appreciate it. Or even on the video and explaining my trades to go a little bit slower, to go a little bit faster. That's everything. But hope you guys enjoyed. I'll catch you in the next one.